Eric Muadith, Muadith.com, with a weekend analysis for U.S. markets for the weekend of July 18th and July 19th, 2015. Take a look at how the markets closed here. We see the biggest mover in terms of the major averages was the NASDAQ, which was up about 1%. And we see that gold was down about 1%. And the Dow and the S&P 500 were on the opposite side of unchanged. For the week, we had the S&P 500, which was up about 2.41%. And we had the NASDAQ, which closed at fresh all-time weekly closing highs. The NASDAQ was up for the week, up major 4.25%. And we see that for the week, the Dow, a little bit less, but it was up about 1.84%. It's worth noting that one of the reasons why the S&P 500 had a nice gain for the week is because it managed to move its weekly RSI above 50. If you recall, last weekend we went into the weekend with the S&P 500 trading just below 50 at 49.46 on the weekly RSI, and this week we finally moved above 50. And as we had noted last weekend, any move back above 50 was going to be for a good rally for the week, and we had a nice week in the S&P 500 and markets in general. Now if we take a look at the NASDAQ from a weekly standpoint, we see that we broke out above the recent previous weekly closing high of 5117, and as long as the NASDAQ is holding above that breakout level, this market has a chance of continuing to push higher. Now we come back to the RSI, and I think we are still have to decide whether the market is going to hold this line or not. This has been resistance on the way up, so depending on how the market responds in the coming week or so, if this is confirmed as resistance with a move back below that line, if this is confirmed resistance, expect markets to pull back. Otherwise, we also have to be open to the idea that this looks like the potential is there for the market to continue moving higher. And as long as it is breaking above this long-term resistance line on the weekly, the idea here is that actually the market could actually take off and move even higher. We also see that the NASDAQ did move higher after finding support on this line we had drawn over the last couple of weeks. The market came here and did show support, hence the move this past week comes from a very nice support on the weekly RSI. So no surprise in terms of the market finally deciding to go higher. Take a look at the daily for the NASDAQ, and now there's a question here. Obviously we see that we closed above the recent daily closing high. As long as the market is trading above that range, above 51.50, market should be looking to move higher. But I think the main question here is what it's trying to do on the daily RSI. For one, we see that we moved above this prior line of resistance here, and also we are trading above a prior uniformity line of resistance, so above this line here. So we are above both lines, and as long as that's the key and that's the indication that the market is trading above both lines, we might be looking at a market that wants to move higher. So depending on how things play out here, anything above those two lines is actually very bullish, and one suspects that the market should continue to trade well and even record higher prices. Now keep in mind, this doesn't mean that the market can't go down from here. If it has uniform activity back below that line, something like that, if it ends up having uniform activity, then that's still going to be a level where we could call resistance. Just like we had some uniform activity reversal here above the red line back below it for this short-term high, we had another instant of uniform activity above the red line and back below it for these highs, and even the highs here, the market had uniform activity above the red line back below it. So even though it's doing well breaking out, we have to be aware that if it forms uniform activity in the coming week or so, that's going to suggest that it could stall. So right now, if we are to be neutral, it looks like it is moving above this line and also moving above the line of resistance. it needs to sustain that move above those two lines if it is to record higher prices. Otherwise, this could be a trap eventually if it ends up having uniform activity. Now, what do I mean? Take a look at the recent support on the daily for the NASDAQ, and you see that it held this line here with this double bottom support. We discussed this while this was forming. Now that took a while, about 2 weeks, actually about a week or so, which was this period here. And so it takes many forms for market to show support or resistance. Here we saw that it was a double bottom support. So that's to say that it's not out of the realm of possibility that eventually this becomes just another area in the market where it stalls. So let's keep that in mind. It looks like it's wanting to break out, but it is not necessarily clear which way it wants to go. So it just depends on what it does in the coming days. If it continues higher, good. If it stalls, then that suggests that there is a pullback to take place for the next swing trade. Take a look at the Dow, and we see again the Dow doing what it's been doing since 2013. Since 2013, the Dow has been using the 50 level to bounce and move higher without fail. Throughout all this pullback, the market's been coming back to the 50 level on the RSI, moving below 50 and back above it with uniform activity, which is exactly what it did here over the last 3 weeks. So the fact that the market moved higher this week should not be a surprise. We also see that the line connecting RSI lows held. So really, all the levels we were looking at last week came into play, and the market looks like it wants to bounce. So now we don't know which way we're going to go because we are trading between these two lines. This line has been resistance on the way up. This line has been support on the way down. We are trading between those two lines. Tough to tell which way it wants to go. But we can take a look at the daily, and on the daily we see that the Dow daily has come back to a level of resistance. If you take the line connecting recent RSI highs, seems like with Friday's slight close that the market is seemingly showing resistance on this line. If that's the case, then one can expect a pullback. So still have to wait how that plays out. Otherwise, the market has a chance, if it chooses to actually step on the gas and stay above that line, showing that it has broken out. If it breaks out, expect the market to take out recent daily closing highs. We also see that support did come exactly where we thought support could have been seen, and the market did show support on the line here, on that green line. So that was one line of support where the market held, and also we see that it held the line connecting RSI lows. So this actually, we talked about this while this was forming about 2 weeks ago and a week ago, that this is where one would expect the market to show support. It did that, and the fact that it moved higher in the past week or so should not be a surprise. Take a look at the Dow hourly, which has been showing resistance since about late Wednesday, coming back to the hourly, and here I am using RSI period of 26, and I'm not using 14 just to remove the noise. So 26 period RSI. If you take a line connecting recent highs, you can see that it is stalling exactly at the line. So if it can't move above this line, I would suggest that the Dow hourly is indicating that the market should be on pullback mode. Let's take a look at the Dow Transports daily, and we can see that the Dow Transports daily right now are trying their best to break out above this obvious line of resistance. As you can see, this is where it's been forming resistance over the last couple of, let's call it throughout 2015. If it can break out above that line, that's going to indicate that the market is due to recover. Otherwise, if this line ends up being another instant of resistance, if it can't hold above this line, and if it can't move above the 50 level where it's been stalling, in fact, we can say the Dow Transports have been stalling and have not been able to stay above 50 since about middle of March of this year. Every time they come to 50, they seem to stall with uniform activity. As you can see, we stalled here, we went above 50 and back below it with uniform activity, short-term highs. We stalled here around 50, which was this level, and here we seem to be struggling to hold above that line. So if we can break out, the best way to know that the market is recovering and wants to move higher is if the Dow Transports can take out this obvious line of resistance. If they break out above that, then definitely we need to be staying long and look for the market to record higher prices. Let's take a look at the hourly for the Dow Transports, and like the Dow Jones itself, we see that it's come back on the hourly to a level of potential resistance. So this line connects RSI highs, and without fail right now we are looking at this market coming back to test the same level where it has been showing resistance. So the hourlies in terms of the Dow Transports and the Dow itself seem to be indicating that the market should be looking to go down here in the coming days. S&P 500, again, just like the other markets we discussed previously, if it can hold above this line here, this red line, if it can hold above that, then that could be where it starts moving higher. Otherwise, this red line is where it's been stalling recently. As you can see, off the highs, it hit that level and pulled back. And now we are looking again. We came here, we hit that level with the double top on the RSI, which was that high. And now if this becomes resistance, expect this to be a high. For this market to truly record highs, it needs to continue moving higher above that line of resistance. It also needs to take out the recent daily closing high at 2130.82. So I don't know which way it wants to go, but the hourlies could be indicating resistance. Again, tough to see, but there's a resistance line right there. Tough for you to see because it's very close to either on the line, it's trading on the line, so we don't know whether it's breaking out or not. But if it can hold above the line, that's very bullish short term if you're a bull. If it needs to break out above that line, that would be good. Otherwise, if it shows resistance on that red line, then one can look for the market to stall. So again, let's draw the red line here. If it trades below that line and stays below it, that's resistance. So really the market is at an inflection point. As you can see on the daily for the S&P 500, if it can hold above this line where it's been stalling, then it records higher highs. But if it stalls around here, then we can expect another pullback. If we take a look at the VXX, just want to show you that our analysis in the last weekend's video analysis on the end of week analysis, I'm trying to say, you can see that the VXX had given us this what looked like a triple top. And the indication was that if this was showing resistance, then the market was going to move higher. And that has exactly played out correctly. And again, for those of you who are new to this concept, this is where the VIX has been stalling during these highs. And every time the VIX stalls with the uniform activity above the red line back below it, the general market starts moving higher. So this triple top was indication enough that the market was going to move higher, and it's done exactly that. We take a look at Apple, and last weekend we discussed the idea that Apple has also been holding steady and coming during every pullback, coming back to the 50 level on the weekly RSI and holding. It did that over the last couple of years successfully, and you can see again here it held, bounced on the 50. Very simple concept. The key is that it has to be uniform activity, which it was here, and it did the same thing here. Also here we see uniform activity at the 50 level on the weekly RSI, hence the stock is moving higher. So really not much of a surprise. We discussed that in the past market analysis video, and also a line connecting recent lows. So finding support here made a lot of sense. We also talked about the daily. We took a look at the 2-year daily for Apple, and we can see that the line where it has been bouncing did come in play. And again, the key is uniform activity. You can see uniform activity here on the line, support. Uniform activity on the line, another level of support. Uniform activity to the line, it held. Uniform activity here, that held. And all these points held with uniform activity. And then recently we have a V-type formation, which is uniform activity. Hence the stock has been moving high in the past week. If we take a look at a 1-year daily, so we can look at this closely, you can see it held exactly where it needed to hold with uniform activity back above that line. So now the question is, what next? And I think what next is probably short-term resistance, just to be consistent with the other analysis for the general markets. You can see it's come back to test the recent highs. It broke down here. Oh, let me draw that again. You can see here clearly that it broke down here on the RSI, so we can draw a simple line from there, and this happens to be the break of the highs here. So if it stalls, just like we've been seeing in the Dow, NASDAQ, S&P 500 and the Dow Transports, if it stalls here, it moves lower. Otherwise, if it's to see higher prices, it needs to take out that red line and it needs to be trading above it. Right now it looks like, to me, this is more likely to be resistance short term on a day-to-day basis. If we take a look at the monthly, you can see that Apple has been doing well, staying above 69.1 on the monthly RSI. So it has held above 69.1 generally since about mid last year. So over the last 12 months, RSI has stayed above 69.1, which is a sign of strength. And now it has a chance of breaking out if it can take out recent monthly closing highs. If it does that, that's a buy signal. So if Apple breaks out above the recent monthly closing high of 130.29, then it's a buy. So watch out for that. Set an alert. Anything above that is bullish. And the fact that the RSI continues to trade above 69.1 is also a sign of strength. And we see that one of the MACDs is already trading at 3-year highs and close to all-time highs. So the MACDs and the RSI are doing exactly what they need to do for a quality breakout. Okay, so in conclusion here, why don't we take a look at the monthly charts? We begin by taking a look at the monthly chart for the NASDAQ. And the NASDAQ has been holding its monthly RSI since about April of 2013. So for about 2 years plus, 2 years, this market has been trading above 69.1, and it is the exact reason or the technical reason why the market has moved from here and gone on a strong run over the last 2 years plus. We continue looking at the market showing the RSI above 69.1, and right now we are looking at the NASDAQ having successfully taken out the recent monthly closing high. If the NASDAQ can successfully defend that price and stay above 50.70, so 5070.03, if it can hold above that, then this market should continue seeing higher prices. Let's take a look at the quality of this breakout. The quality is good because we see that RSI is above 69.1, and we can also see that the MACDs are close to 3-year highs. So it looks good. If we take a look at the SPX on the monthly, we see that the XPX is just about to move back above 69.1. If it recaptures 69.1, you are better off staying long because the market is going to be very strong. The level to watch on the S&P 500 is, let me get that to you, is 22,000. So 2,107.39. If the SPX can hold above that level, then it's also breaking out successfully on the monthly. And then the Dow, last but not least, or last and least, all right, the Dow here needs to break out. If it's going to break out and show strength, needs to take out the recent monthly closing high. The level to watch there is the same level we've been watching the last couple of months. Is 18,132.70. So, hey, with the NASDAQ moving to new highs, S&P 500 breaking out on the monthly, we have to respect the potential for this market to go higher and surprise us. Otherwise, the dailies are showing resistance. The weeklies are looking good. So this market is trying to confuse us. Let's pay attention to the daily. If the daily shows resistance, if the daily confirms resistance on this line that we've been talking about, then the market pulls back. If the market can break out and stay above that red line, then maybe it has a chance of taking off. Eric Muaded, Muaded.com. Enjoy your weekend. Good luck, peace, and blessings. E-A-C-S. Mwah. Yeah! Yay! Woo!